2022 may well have been the worst year in crypto's history. 2023, however, could yet prove to be even more significant. Why? Regulation. For much of the world, crypto remains the Wild West of the 21st century, and a slew of scandals this year have done little to change that opinion. Terra Luna, Celsius, 3 Arrows Capital, FTX, of course, and that is on top of high-profile hacks and the broader bear market that has seen trillions wiped from the value of digital assets. Collectively, this has led to louder calls for strong action from rulemakers.
There's a very long list of bad things that have happened this year amid the bear market. All of these incidents are giving reasons, are adding fuel to giving more reasons for regulators to expand their regulatory perimeter.
At the center of it all is what's happening right now in the United States, and FTX is a big focus for Washington. The first of at least 2 hearings into the crypto exchange's meltdown was held this month. Lawmakers are demanding answers about what happened, but they're also using the scandal to inform bills being considered by Congress on crypto regulation. That includes the bipartisan Loomis-Gillibrand bill, which would see crypto regulated more like a commodity than a security. They're also backing clearer rules on stablecoins as well, and there's additional bills on things like crypto money laundering, among others. All of which is likely to be considered by a new Congress starting in January. Caroline Malcolm is from blockchain analytics firm Chainalysis. She says that the US is playing catch-up to other countries where rules have already been established, but it's clear what happens in Washington will make a huge difference to the industry worldwide.
The US, though, continues to be a very important player, particularly on the international stage where a lot of these global standards are set. So I'm thinking here about groups like the Financial Action Task Force, groups like IOSCO, but also perhaps something which hasn't been thought about too much lately, which is the Basel Committee. So the work that's been done on banking supervision, in particular the exposures that traditional financial institutions can actually have to the crypto assets. There was a second public consultation on that earlier this year, and we're looking to see that guidance come out for national regulators in early 2023.
Here in Asia, a down-on-its-luck Indian government seeking its pound of flesh on the exponential gains made in digital assets has been putting off investors in the asset class. The government imposed a series of taxes which began with a 30% levy on all profits of crypto sales. Hong Kong's Financial Secretary Paul Chan recently said regulation of businesses is a prerequisite for market development, and the city's new virtual asset licensing regime comes into effect in June next year. Singapore's financial regulators, meanwhile, have been sending a consistent message. Trading in cryptocurrencies is fraught with much risk, but at the same time, the digital asset industry holds many promises.
What we've seen really across the globe is a shift from just looking at some very specific aspects of regulation in crypto, and in particular AML CFT rules, to actually look at a much more comprehensive range of policy issues that need to be addressed by regulation. One of the biggest items that we've seen in 2022, the markets and crypto asset legislation in the EU. This is not just about a licensing regime. It also has disclosure requirements. It has environmental and climate requirements. It's got market integrity requirements. And all of these things fit into this much bigger picture.
A critical aspect of this is that there's likely to be a great emphasis not just on setting the rules, but also on enforcing them. Some, like Caroline, point towards Russia's invasion of Ukraine as a reminder that sanctions can be effective. Sam Bankman-Fried's looming prosecution is also likely to further underline this. But there are concerns that in trying to establish security and consumer protections, regulators have the potential to go too far.
It's going to be challenging for them to balance the interest of acting swiftly, and at the same time, thinking clearly and carefully considering whether the regulations, the laws that they are applying, and the regulations that they are enforcing are actually relevant in some of these cases. I'm concerned about overregulation, especially when it comes to decentralized finance and some of the decentralized platforms that the industry, the crypto ecosystem is building, which is not really contemplated by existing financial regulation.
While the downturn has hit everyone in the sector, more of us than ever are trying to get into crypto. Multinationals and blue chip brands are among those moving to take advantage of crypto and blockchain technology. Balancing their interests with those of retail investors and others in the space is going to be crucial and potentially very painful too.
You've got sort of different groups within the crypto ecosystem, whether it be your crypto native companies through to your traditional financial institutions who are thinking about or beginning to dabble in terms of different aspects of the crypto ecosystem, whether that being trading facilities or acting as a custodian for digital assets. And those different parts of the ecosystem face different challenges as we go through this transition period.
While 2023 will bring big changes on this front, those changes aren't necessarily going to cover everything. The regrettable fact is that there are likely to be more scandals, more hacks, and more money lost in crypto. As this sector continues to mature, the emphasis everywhere is about taking responsibility. That means self-custody, self-protection, and self-preservation.
Certainly, I see that the community and the industry can play a role in enabling our regulators to find the right balance, to roll out the necessary regulations that will supplement our ability to protect ourselves. But predominantly, I still believe that it is up to us to protect ourselves with the tools that we currently have already in place.
It has been a momentous 12 months for the crypto sector. We at Forkast have done our best, I promise, to try and cover everything that's been going on for you and bring you the details and the analysis that's really vital to these stories. If you've liked any of the content, please like and subscribe to our channels. Please also share it and let us know what you think as well in the comments or on social media.